Hello traders, welcome to the LFB and our global video charting review. This is for Monday, February the 28th, 2011. I'm Marco Haig from the LFB Trade Desk with our daily look at the movement in the global traded market. We do have to point out that Forex trading does involve substantial risk of loss and is not suitable for everybody. Please read through the disclaimers posted to the website before taking and using information in the video. Recent client notes looked at the potential in the dollar index breaking lower to test support at 76.50 over the course of the early part of this week, and that's exactly what's happened in trade on Monday. But we need to be very, very careful here because we've got divergence in these global markets. We can see the dollar index here. This is the 1 month forward contract on the dollar index, and this is showing us that we're in a short trend. We've also got short momentum as well on the dollar index, indicating the strong dollar policy that's spouted by the US administration is not following through, and in a lot of regards, nor could it easily follow through with the amount of impact now coming from quantitative easing. Although we have seen central bankers and regional banking markets looking at a dollar which is impacting commodities, inflationary pressure without growth, and also as a global reserve currency, we're looking at manipulation on the dollar, be it by default or design, which is creating reactionary soundbite headlines on a constant basis from those looking to protect the value of their own currencies that are now getting dramatically stronger against the greenback. It should be noted, although we're on a 1 hour chart here, we do have a quadruple bottom formed down here, which from a technical perspective over the course of the last 4 months has seen the dollar index bounce higher from these oversold reads. So be careful if you're not already short the dollar index. Now would probably not be the right time to be looking to get in at these extended levels. You'd be looking for a retracement back up to the 77 area and to move lower from there. S&P 500 equity markets have gone in the opposite direction to the dollar index in trade on Monday. But it wasn't one-way traffic. The Sunday session started with a move lower that tested 1313 support, and not until just before the Wall Street Open did S&P 500 equity futures trade make a break higher to test the 1325 area. Also, point of note that the 10-year Treasury note has lost value overnight. Now that's in line with this near-term move higher on the S&P that sent the 10-year Treasury note off a test of resistance at 120.50 down to test the 120.20 area. Oil has moved lower as the overnight session unfolded. Oil made a move lower, looking to hold the Friday close if possible, but we've now got a flat kind of outlook on our trend, and we've got a very mixed momentum read as oil now trades around 97.50. So same as the dollar index, if you're not already in an oil position, you really would be looking for this market to make a sustained move and test of support and look to be buying from there. Gold and silver move sideways after the initial move higher in Asian trade. And as we can see from the gold charts, very disjointed reads on the near-term charts. We've got a 30-minute chart up on these near-term reads, although we're using a 1 hour chart for our main trend and momentum analysis for new signals and new alerts. But the near-term charts you can see on gold look very disjointed. If we pull out to the 1 hour, we're in an upwards trend, although consolidating heavily around the 14.15 price point. There is a new signal on gold bullion, and that's with a break above 14.19, and we're going to then be targeting on the upside of gold 14.27, and then above that will be 14.35. Clients can see the access and availability to price points as they change and as they unfold in the global market outlook area of the site, the trader advantage page. So trader services, global market outlook, click on the trader advantage page, and that then reveals the trader note that shows our sentiment and momentum index, where we analyze the global markets trade, not only just to send out signals that are actionable on foreign exchange pairs, but we try and connect the dots in regard to global market movement. The SMI, the Sentiment and Momentum Index, analyzes global market trades that includes the equity indices, S&P, German DAX, Japanese Nikkei. It also covers gold bullion, silver, crude oil, the 10-year Treasury note, as well as the dollar index and the major pairs as well. And we can see the latest alert was issued at 8:10 this morning. That was on gold bullion, signaling long with a break above 14.19, and there's the upside targets. And then outside of that, we will update on a daily basis when the trade plans are issued. We'll update where each of the global markets are for you, so you can look if you've got equity exposure, if you've got oil exposure, if you're looking to balance your gold or silver portfolio, looking for a time to just rebalance and get a visual aspect of where things are, you can use the SMI index. The signals will get emailed out to clients directly, so as things change, the trade team will update clients via email with the movement that's happening, and that then complements the signals that are issued on the currency pairs. Currency signals can be found under trader services. If you look at Forex trade signals, this will be very specific, where the SMI, the sentiment and momentum indicator, covers a general view of the global market. The spot signals will be very specific. And there's details of the signals that were issued overnight, long entry on euro dollar. If we were to click on that, that would give us the management and the movement instruction. And we've got a new signal issued on dollar CAD. Also a note here that there has been a gold bullion alert issued as well. So it's the trader advantage page. You can get the overview of the sentiment and momentum indicators, and then you can get access to all of the Forex currency signals from the spot signal page. Taking a quick look at euro dollar, most of these pairs are the same today. Struggled a little bit from Friday trade, struggled a little bit at the open. When the German DAX market opened, we saw some volatility that had the German DAX pulling back to test support at the 50-day moving average around 71.55, and that was the reason that euro initially pulled backwards. And then once we'd seen equity traders buying those tests of support, euro dollar was free to make that next move higher. If you're not already in euro dollar, not already in these major pairs at the moment, then you might just want to hold fire, wait for a pullback, and then go from there. So that wraps up our review of the global market for Monday, 28th of February. We'll catch you tomorrow.